Hello, listeners. This is Ritu Goswami, Assistant Vice President and Sector Head at ICRA Limited. Through this podcast, I'll be sharing ICRA's views towards the growth trajectory of state-focused EPC players. The National Infrastructure Pipeline, or the NIP, envisages a sizable capital outlay of Rs 111 trillion towards the infrastructure segment during fiscal 2020 to 2025. The capital outlay by the states is anticipated to form nearly 24 to 26% of the investments planned under the NIP. The aggregate capital outlay of all the states grew at a healthy CAGR of 17% over the 2 years ended March 31, 2022. The revised estimates for fiscal 2023 and the budget estimates for fiscal 2024 also indicate a continued growth in capital outlay by the states. ICRA's analysis indicates that the transport, irrigation, water supply, and housing and urban development sectors have received higher allocation and accounted for nearly 60% of the aggregate capital outlay in fiscal 2024 based on a sample set of 13 states. The capital allocation across various subsegments varies across the states. While transport infrastructure remains the key focus area for Uttar Pradesh, Karnataka has the largest share in the capital outlay incurred towards irrigation and flood control. The competitive intensity across the infra projects awarded by the state governments, including state undertakings, remains moderate and relatively lower than that in case of central government projects. Nonetheless, tenders floated in the roads and water supply and sanitation segments have witnessed healthy participation in the past 1 year. The order book position of EPC players focused on state government projects has improved in the last 1 year, supported by robust new order inflows in fiscal 2023. Going forward, in fiscal 2024, the order book position of state-focused EPC players is expected to remain strong, providing healthy revenue visibility. However, ramp-up in execution momentum remains crucial to meet the project timelines. ICRA expects the execution pace to improve and revenue growth to remain healthy at around 11.5 to 11.8%, supported by adequate orders in hand and continued focus on infrastructure investments by the state governments. State-focused EPC players have generally witnessed a relatively higher working capital requirement, primarily owing to a larger receivable cycle in the projects as compared to the central government projects. Further, with 6 out of 13 sample states going to elections in the next 12 to 18 months, the state-focused players remain exposed to the risk of change in priorities or retendering should there be a change in government in those states post-state elections. Thank you for listening and stay tuned for our upcoming podcasts.